growth projections call for a significant slowdown in household growth. So this is the context that these 10-year projections are going in. They're in the context of a general slowdown in overall household growth. And that slowdown is due really to a decline in the underlying population growth that really drives our household growth projections. And that systematic decline that we're seeing in future population growth, has the potential of being hastened by a downturn in immigration. So that's kind of the latest thinking. But as for the 10-year projections themselves, we see that the slowdown in household growth will be reflected across both homeowner and renter household growth. The best case scenario in terms of in terms of homeowner growth is like the high projection for home ownership gives us homeowner household growth that's about historically average. And the low homeownership rate projection gives us the highest rental demand, and that rental demand in the highest scenario for rental demand is about historically average. That means that at worst, homeowner and renter demand will set new record lows, really, again, because it's within the context of this decline in overall household growth. So the pie is getting smaller, and so however that pie is being split, it will on the low end, it will be historically low levels of growth, either for homeowner or renter demand. The current state of housing affordability for home buyers and current trends really suggests that the lower homeownership rate scenario that I'm about to present seems to be the most likely. But we'll talk through that. Because there's just a high level of variability in these projections. And we'll go through the kind of levels of uncertainty that are involved in them. So like I said, the first thing we need to understand in looking at these 10-year projections is the overall scenario, the overall context of the decline in the future household growth over the next 10 years. So I want to talk a little bit at first about the household projections that we put out in January. What are these household projections? Well, our household projections really give us an estimate for the number of households overall in year 2035 and 2045. The numbers are available by age and race and ethnicity, and also by household type. So we can get to see, so in other words, the number of households in 2035 and 2045. So we get household growth by age and race and ethnicity, and adapt it to a sense of what sort of household types these involve, whether it's a lot of single person households, family households, or the like. So we can get a sense for what the overall demand level is on these dimensions. The household projections are demographically driven projections. They start with the population projections from the Census Bureau, which provides population growth by 5-year age groups and race and ethnicity groups that we use as kind of a basis for our household projections. So we have the population projections, a whole grid of numbers. We apply to that grid of future population the likelihood of each person heading an individual household. So it's the headship rate. So how many households will this future population support? And so taking the population growth, applying a household headship rate, we translate population growth into household growth. And that gives us our household population by age and race and ethnicity in 2035. The findings, the major finding of running through this exercise and creating our household projections is that household growth is set to decline rather substantially over the next 10 years and even further over the next 20 years. So here we're highlighting 2 of the 3 household growth projections. We had a high, middle, and low projection. We're emphasizing here the middle and the low projection based on our understanding of an expectation for for future levels of immigration, which are the difference between the high, middle, and low. So we're looking at the middle level immigration projection for the future and the low level of immigration projection for the future. So all said, what that means is the rate of growth in households, we're expecting the number of households to grow by about 8.6 million over the next 10 years under this main middle projection. And you can see here that's substantially lower than what we've seen over the last few decades. And even lower still for the low immigration projection of about 6.9 million over the next 10 years. And lower still even for the 2035 to 2045. So this whole context of slowing of household growth over the next decades. Behind that, as I said, population growth is really the driving force of our household growth projections. And so the slowdown in household growth in our projections is really being driven by the slowdown in the underlying population growth levels that we get from the Census Bureau's population projection. So here again, we're highlighting the middle and low immigration projections, which show significant declines in population growth over the next 10 years, and then even further in the next 20 years. What's driving the decline in population growth? And that's really declines in the natural increase, which is the natural change in the population as a combination of births versus deaths. So here we see on the left, the overall rate of population growth in orange really declining, following what we see in these purple bars as a slowing of natural growth. So births slowing, deaths increasing more quickly than births. And so we see natural growth in the population turning negative, actually. So where the number of deaths outnumbers the number of births by 2038. And so we can see how the overall population growth, even when natural growth turns negative, overall population growth still remains positive at almost a million, about 800,000, and that's due to an estimate of future immigration. That's where immigration comes in. So we see here that immigration is staving off even more rapid declines in population growth because this underlying forces, demographic forces of an aging population, is really pulling down population growth. So our 10-year projections utilize this main projection for immigration, which gains favor when we look historically at historical levels of immigration. The population projection that underlies our main series household projections calls for about between 850 and 900,000 net new immigrants coming into the country every year for the next 20 years. And we can see here, that's in line with what we saw in the 90s, 2000s, 2010s. So that brings some favor. The other reason that benefit using the main series is according to the CBO immigration estimates, 900,000 is about the level we can expect for annual increases in the natural the legal permanent residents every year. And so it's excluding that's the number that the CBO puts out for immigration when you exclude border crossings and other sources of immigrants. So that's not to say immigration couldn't be lower, and so we still have our low immigration projection there, which is about half of the main rate. But our 10-year projections go on the middle series projection, so keep that in mind. So we have a declining, so bottom line, declining pace of household growth. The projections also show, some other big trends we see in our household projections is significant increase in older adult households 80 and over, doubling over the next 20 years, but significant growth. We also see growth in millennials, pushing up growth in households headed by people in their 40s and 50s over the next 10 years. Yikes, millennials in their 50s. So that has implications for home ownership rates as well. Other things we see in our household projections is significant amounts of growth from households of color. Over the next 10 years, we see 98% of the growth in households projected to be from Black, Hispanic, Asian, and all other race households. And we apply household types onto our projections. We see the aging in the population, large numbers of single person and married without children, empty nester households. We can see a big growth in those, mainly due to increases in older households that are single person households or married without children. We also see a significant growth in the number of married households with children, married and unmarried, largely due to the increase in households in their 40s and 50s. So that's the quick run through of the household growth projection. Slowdown in household growth, increasingly dependent on immigration, increasingly diverse sources of growth, racially diverse, ethnically diverse, and significant growth in older adult and middle-aged households. All of these trends have implications for homeownership rates in the future. But really, in order to understand the impact of on homeownership rates in future, understand future demand for homeowner and renter households, we really have to run this to ground a bit more than we can get from just overlaying, a simple overlay on the projections. And so that's why we have a whole paper that we just released on our household 10-year projections. So what are the 10-year projections? It's similar there. You can see, you'll see similar ways in which it kind of parallels the methodologies and the way we put together the household projections. But what do we have? We have, what do these 10-year projections do? They project homeownership rates first, and then the number of homeowner and renter households in the U.S. in 10 years. By age, we will get these numbers in 10-year age groups. So it gives us 6 categories, and by race and ethnicity. Quick on the methodology, it's a demographically driven projection of homeownership rates, which means household growth and changes in race and age distributions are really what's driving this, and not financial changes, economic changes. So that we'll talk about that. That's one big caveat to these projections, is that they're demographically driven, and so they really are playing off of our household projections. So what do? We start with the household projections for 2035, and we apply to them assumptions for homeownership rates by age and race, and that gives us the number of homeowner households by age and race that we can sum up. And so to look at this a little bit more, more technically, kind of a visual of it. So we have our grid, we have our household projections by age and race, gives us a number of households in each of those categories. We have to come up with, we come up with an assumed homeownership rate within those categories, multiply them together, we get homeowner households by category, sum that up, we get total homeowner households in 2035, divide that by the total number of households, we get a total US homeownership rate. And it also allows us, once we get that, we can get the change in homeowner and renter households over the next 10 years. So that's a little peek into the Excel files behind this calculation. But what are those? How do we come up with those estimates for what homeownership rates are going to be in 10 years? And we have 3 scenarios that I'll talk through with you right now. And the results, here's a quick look at the results here, but we have one scenario that really shows homeownership rates staying stable, one with rates going up by a little less than a percentage point, and one where they are declining by a percentage point and a half. So modest changes in these demographically driven scenarios. So what's scenario 1? Scenario 1, we assume simply it's the most simple estimate we can have. It's our baseline estimate. We assume homeownership rates remain constant by age and race. So we just assume that today's homeownership rates in each age and race group will be the same in 10 years. And so that any change in the homeownership rate, the number of homeowner households, is due to changes in the size and the distribution of population by age and race. So in this scenario, aging of the population lifts homeownership rates because homeownership rates for older adults are generally higher. We can see how on the left here, homeownership rates of 75 people 75 and over are well above average. And so when we look on the right, we apply, consider this distribution of homeownership rates with where household growth is coming from, and how most of the household growth is coming from an increase in households in this high homeownership age group. Aging is going to be an upward force on the overall U.S. homeownership rate. At the same time, there was also, we saw in the projections, increased growth. Most of the growth was from households of color, and that is a downward force on homeownership rates due to these persistent and large gaps between races and ethnicities in homeownership rates. And so here we see the difference in the racial gaps in homeownership rates by age. In this respect, the 98% of household growth, coming from households of color, is really a downward force as more households are in these lower homeownership rate groups, as long as these homeownership rate gaps persist. So we have aging the population lifting homeownership rates higher, increased diversity pushing homeownership rates down. The net sum is actually zero. We actually see these two when you look at the total homeownership rates. Here's a look on the left of current and projected on our base case homeownership rates by age. We see that all in, the forces of aging lifting homeownership rates are really equaled by the forces of increased diversity pushing them down, so that the actual U.S. homeownership rate under this scenario stays constant. Getting into, is it, thinking ahead at our second scenario, is it plausible? Let's think about scenario one. Is it plausible to assume homeownership rates by age and race will remain constant over the next 10 years? It's not as static a situation as you would think, because it assumes homeownership rates of younger cohorts rise enough over the 10 years to match the rates of people 10 years older than them. So a 20-year-old today would have to gain homeownership rates at the rate in order to match the homeownership rates of 30-year-olds today. But current rates across cohorts, across age groups, are generally below rates of their predecessors, the rates that the predecessors had 10 years ago. So anyway, holding rates constant would mean today's younger cohorts would need to catch up to match current rates of older cohorts. Let me just do a quick stop in the jargon alert. So cohort, what do I mean by cohort? It's like a generation, similar to a generation, but smaller. It's a birth cohort. It's in terms of this paper, it's a group of householders, a group of householders that are in the same 10-year age group, born in the same 10-year period. So for example, a cohort of households aged 25 to 34 in 2025, who will be 35 to 44 in 2035, so in 10 years. So following a cohort. And what's a trajectory? A trajectory is the path that a homeownership rate is experienced by a cohort over time as they age. So when we think of people who are 65 to 74 today, how did they get to the homeownership rates that they have? So instead of, so looking back in time, we can see how when they were younger, their homeownership rates were lower, but you have a certain increase in homeownership rates, a general increase in homeownership rates, a trajectory of increase for a cohort as they age. So we can see homeownership rates for a cohort generally rise fast through young adulthood, and the increases kind of moderate. And so how does this play into our thoughts on homeownership rates today? Well, I said earlier that our base case is assuming that younger cohorts today are able to match cohorts 10 years older than them in 10 years in order to keep constant homeownership rates by age and race. Here's a look at homeownership rates of two cohorts right now and then their histories. And so we can see how this millennial cohort, this is actually a 5-year cohort, their homeownership rate is about 2.5 percentage points below where Gen X was at the same age. So this millennial group is 34 years old. Their homeownership rate's a little over 50%, but you can see how when this Gen X cohort was that age, they had higher homeownership rates. So in order to match the Gen X cohort's homeownership rate in 10 years, the homeownership rate of this millennial cohort will have to increase, not only increase as much as Gen X did, because if they only increased as much as the Gen X cohort of the next 10 years, they would still be below, but they'd have to catch up and then hit, catch up to that Gen X homeownership rate. Similarly, Gen X themselves, their homeownership rates are lower than baby boomer homeownership rates had. So here we see the Gen X cohort, about 49 years old today, their homeownership rate below where this baby boomer cohort's homeownership rate was when they were 49 years old. And so baby boomers would have to, or the Gen X would have to catch up in terms of homeownership rate. So all this is to say, what sort of increase in homeownership rates can we expect for today's cohorts over the next 10 years as they age? And so this makes us go back and we look at the history of the data and say, okay, let's look at all the cohorts in these ages by and what was the kind of increase in homeownership rate that they encountered as they went from age, say, 15 to 24 to age 25 to 34? Or what's an average increase in homeownership rates over the next 10 years to expect for a 25 to 34-year-old cohort as they move to be 35 to 44-year-olds? So what we did is we calculated all these and got kind of an average increase in homeownership rates as these cohorts age through a certain age groups. So we have a minimum, maximum, average. Let's look at, we thought, what would be the first, the most direct assumption for today's homeownership rates? And we started with our scenario 2, where we just assume, say today's households have an average increase in homeownership rate, a historically average increase in homeownership as they age. And that became our scenario 2. And that scenario actually resulted in a slight increase in the overall homeownership rate. And here's the result of homeownership rates in 10 years by age. And we see overall, we see that total increase, of about 0.8 percentage points. But generally, we see an increase. The biggest increase we see by just simply assuming average, trajectory of homeownership rates is a big increase in homeownership rates for 25 to 34-year-olds, kind of really signaling how homeownership rates for that group are low currently. But for the other older age groups, we actually see slight declines. So the average increase would still result in slight downturns in homeownership rates in each of these age groups. But then we thought, so we have 2 scenarios so far. We have the base case where we just hold homeownership rates by age and race constant. We have a trajectory scenario where we assume households have an average, historically average gains in homeownership rate as they age over the next 10 years. Then we were thinking, is it a valid assumption that gains in homeownership rates for, say, 20-year-olds to 30 or 30-year-olds to getting 40, will they have an average experience in obtaining homeownership over the next 10 years? Because homeownership, buying a home is so expensive. So here we see, when we apply home prices to current interest rates and for typical first-time home buyer terms for getting a mortgage, we could see the income you need in order to buy the median price home in the U.S. is sky high right now, right? So that's that's a big barrier. We also see we're looking at homeownership rates themselves. The barriers to entry to homeownership being so expensive is actually pulling down homeownership rates, and it's pulling down growth in the number of homeowners. So here we see the bar the bar is showing the year-over-year growth in the number of homeowner households really dropping as of late, enough to pull down homeownership rates. So this leads to believe this isn't going to be an average. We're not in kind of an average scenario for obtaining home ownership. So we came up with a different scenario. So this is our third scenario, scenario 3, where younger cohorts seeing such barriers to homeownership, they see below average rate of increases as they age over the next 10 years. So the 3 points I want to note on this is this scenario assumes cohorts under the age of 35 currently see the historically lowest increases in home ownership as they age. So households aged 25 to 35 will see that minimum increase as they age next 10 years to being 35 to 45. At the same time, it doesn't assume the low trajectory for everybody. For the older households, it assumes they're going to go at average, just because the assumption is that most of these households are in home ownership already. So we apply just the average trajectory to the households, the older set of households. But then again, for some of the low trajectories were extremely low, and so we limited the downside. So if the low trajectory resulted in a historically low home ownership rate for this group in 10 years, we kind of capped that. We made it so that the home ownership rate, the resulting projected home ownership rate for each of these groups could not be lower than the lowest ever recorded rate. So here's kind of a look at what some of these trajectories look like for just the 25 to 35 year old or 25 to 34 year old age group. We see the average trajectory, the historically average trajectory in the base case, leading to a similar trajectory as the average trajectory. So similar increases actually in this group under the base case and the average trajectory, but we see the historically lowest rate, the historically lowest rate kind of, the label's missing, but the historically lowest rate for these groups are shown in this yellow dot. And so this red line here is showing applying the lowest ever trajectory for homeownership rates for each of these groups historically, coming in well below the historically lower rate. So a lot of these groups are actually capped, and so the homeownership rates in 2035 are the lowest ever rates for a lot of these groups in our scenario 3, our low homeownership rate scenario. But could be lower if it's not a valid assumption to assume rates don't go below the lowest historic rate ever. So that's cohort, or that's scenario number 3. And so to look at this, by age, the resulting homeownership rates by age, it results in a 1.6 percentage point decline in the overall homeownership rate, and some pretty substantial declines in the homeownership rates for households 45 and under, due to applying the low trajectory of homeownership rate increases to these groups. So there's our look at the three homeownership rate scenarios. Now it's time to say what kind of, what sort of growth in homeowner and renter households did these scenarios result in? And like I said, going in, the best case scenario for homeownership rates, or for homeowner household growth and renter household growth, the best case growth scenarios were for growth to equal the average growth since 2020. So here we see how the average trajectory, or the average trajectory scenario results in future growth in homeowner households that was about equal to the historical average. Our base case scenario results in growth in homeowner houses about 18% below the historic average. So our base case does call for a slight decrease in annual growth in homeowner households. And then we see the low trajectory homeownership scenario resulting in growth that's over half, about half, less than half of the average growth in homeowner households, just 337,000 increase in homeowner households per year over this low trajectory scenario. So pretty big decline in homeowner household growth. How does this look by age? Comparing the scenarios, you see the change here is like no matter what the scenario, growth in the number of older adult homeowners is set to be substantial, not affected by our different scenarios much. But the one thing that does change, understandably, is growth in homeowner households in their 20s and 30s. That we applied the low trajectory. So we see, compared to the average trajectory, we see growth in the number of homeowner households in their 20s, 30s, and 40s actually turning negative under this low trajectory scenario. So, and by age, we see, base and average scenario showing growth across race and ethnicity groups. The only real difference is the low trajectory scenario, growth in white households turning negative. What does it look like for renter household growth under our three scenarios? Very similar, just kind of in reverse of the homeowner household growth. So we have the low homeownership rate trajectory scenario resulting in the highest renter household growth over the next 10 years. And that level of growth is similar to the average growth in renter households since 2000. So about a little over 500,000 renter households a year. That's a substantial amount because it has been a pretty, pretty strong period of growth for renter households since 2000. So that's what you get from the low homeownership rate trajectory scenario. But the other two scenarios, significant reductions in levels of growth for renter households. With the lowest growth in the high homeownership rate scenario, where that would result in less than 200,000, 174,000 annual increase in renter households per year over the next 10 years. So average at best, and in the base case and the high homeownership rate case, very low levels of renter growth. How does this look by age? How can we compare the growth in renter households by age across the scenarios? Biggest thing to note here, again, we see the 75 and over group, a large part of renter household growth over the next 10 years under all scenarios. But big thing to point out here is the sharp growth in renter households in 35 to 44 under the low homeownership rate trajectory scenario. So significant growth in these middle-aged but younger households, really kind of showing that impact of the lack of access to homeownership rate. These are kind of the traditional first-time homebuyer age groups, and so we see this low trajectory scenario for homeownership, resulting in pretty significant growth in this age group of renters over the next 10 years. The low trajectory scenario growth in renter households will come across races and ages. The difference being the average and base scenarios result in a decline in white renter households. But under the low homeownership rate scenario, renter household growth will span each of these races and ethnicities. So I think circling around, really the bottom line, we have these 10-year projections. We hope they're useful as a way to think about, viable, plausible movements in the homeownership rate and the resulting demand in homeowner and renter households. It really gave us a sense for the magnitude of changes to expect. But running down this list here, really the bottom line is all of these scenarios come within the context of slowing household growth. So that was the number one factor. We have this, this lower overall growth in households, really pulling down growth in homeowner and renter households. And the extent to which they pull down this growth depends on our assumptions for home ownership rates. And I just wanted to end on that. I said earlier, these projections are really based on demographics. They're based on applying home ownership rates to different, households by age and race, and how movements in the household composition by age and race, really drive changes in the home ownership rates. But that's a big caveat in the history. I can't leave without pointing to this, this amazing chart from the 2016 look at, drivers of home ownership rate changes by my former colleague John Spader and Chris Herbert, really showing that, that it's not, times of demographics. Really, here's the bottom line. In times where the financial environment is stable, demographics do a pretty good job in projecting changes in home ownership rates. But when you have a mortgage boom or a mortgage meltdown or changes in finances, changes in the economy, those far outweigh any sort of change, any sort of demographic impact on home ownership rates. So this is not to say that these projections being demographically, our current projections are demographically driven. That's not to say that they're not to be believed or not to be trusted, but the fact that they are a good baseline with the big assumption that financial circumstances are stable. And changes to financial circumstances, changes to ability to access home ownership, such as a big drop in interest rates, changes to mortgage credit access, financial circumstances could change this. But absent those changes, the changing demographics give us a good baseline for what to expect the underlying drivers of home ownership to do. So I think with that, I will open it up to questions and circle back to David.
Dan, thank you. There's so much going on here. Really terrific and wide-ranging set of questions. And as I said earlier, we will only be able to get to at least some of them. And also to remind folks, a couple folks had asked that we will be posting both the video and the slides. And I also left in the chat a link to the full paper. A lot of people were asking about the immigration assumptions that are behind these numbers. So it both where are we currently in terms of immigration numbers, and if in fact the current crackdown continues, what would that do to the projections?
So, I mean, it's the biggest unknown, right? And it's interesting in the projections that it's the most volatile element, right? But that results in the most simplistic view, because it's a large unknown. But as the natural growth recedes, it has a bigger and bigger impact, right? So the expectation for the future, I mean, all I can see is that, I guess if the question is, does the immigration assumption have a big impact? The answer is yes. We could see in that chart about what the current estimate is about historical. The current estimate, also kind of equates to only getting the typical legal permanent resident additions, right? So that kind of gives a benefit. But the fact that, assumptions of immigration are being reduced, is, is right. It means that we would need to reduce the household growth projections, which are already leading us to some historically low growth rates, right? Um, but if your expectation is that we'll maintain the same level of legal permanent residence, that's what the main immigration assumption does. If you think those are going to get halved, and that's kind of what the low immigration assumption does. But yeah, I mean, all we can do is have a certain sense of what changes to immigration, the magnitude of changes that we're dealing with. And so, from anywhere from, the difference between our medium and low immigration assumptions was, moved it from about a little less than 9 million households per year to a little less than 7 million. It's had an impact of about 2 million fewer households over the next 10 years. So, any decline in immigration below half of, the current average increases in legal permanent residence would mean that much less, because we saw growth in the native population. Well, the resident population is turning negative in 2038, and immigration, whatever that is what's keeping that overall population growth positive, for however much longer after that. So yeah.
Yeah. There are a bunch of questions all sort of related to what does this mean for the demand for housing. Um, and then you may want to take this separately. Do we have any thoughts on what this suggests about the price of housing, but particularly the demand for housing, and particularly the fact that there are so many older households? Does that change the nature of the demand? So if you could sort of speak broadly to demand, and then a little bit about whether there's some nuances in what kinds of housing.
Yeah, a couple thoughts. This was a big topic of the paper released in January, the overall household growth projections, right? And one takeaway from that is that household growth, this decline in household growth really means less pressure, right, on the housing stock, less pressure to increase the housing stock over time, because the rate of, not we have to make up for the shortage plus whatever growth is on top of that, right? So if that growth slows, then it kind of takes the pressure off, making up for this, keeping supply up with demand. The dynamics of the slowdown in household growth really, in that paper, were pointing to increasing dissolutions of households. So increasing oldest adults, 80 and over, mortality rates, moving in with younger children, losing households. So we're losing a lot of older adult households. And so it's not that kind of formations are slowing per se, it's that we're losing more. We're going to continue to gain the same number of younger households coming online, but we're going to lose more and more households over the time. So that loss rate is going to increase. That's also going to kind of shape the dynamics of demand for new construction, meaning there'll be more need for renovation of housing of older adults, that comes onto the market. So that too will eventually help solve the lack of, for sale inventories as more inventories will go. But we're talking about decade here. So it's something that's going to evolve over time. What these 10-year projections show us is a lot of that, action is in the home ownership market. So a lot of the homes that are being, given up by oldest adults will be homeowner households, right? Or so that doesn't mean that the new owner will be, could be someone who rents out that unit, but it's going to free up a lot of homeowner units as well from this, from these. but yeah, I mean, the other striking thing in terms of what's demanded is the big surge in rent, in middle-aged renters that this low trajectory home ownership scenario gives us is, and that's kind of like, I almost want to say that's more of the same, right? It's like we have this blockage of, access to homeownership for first-time buyers, which is leading to more higher income renters, more older renters, and that you can really see that when you switch from, in our scenarios, when you switch from the kind of average trajectory to the low trajectory of home access to home ownership, and a big surge in these middle-aged, older renter households. So that means a lot of millennials, Gen Z, continuing to rent into the future.
Is there you spur a thought in my head about is there any significant difference, or I guess the first question, do you look at it in terms of middle-aged renters, um, or middle-aged households that have kids versus those that don't have kids? Because I can imagine one scenario, which seems to me is has a lot to say with what the demand's going to be. So if I think there's going to be a large increase in middle-aged renters, am I thinking that those are mainly, one or two people, no kids, or that am I thinking that that's just as likely to be, one or two adults with kids, different kinds of demands, different kinds of amenities, etc.
Right. And it's, I think the way that we did this, it would suggest, more middle-aged renters with kids, right? It would, if access to home ownership, unless that, and that's a whole different study as to whether access to home ownership, influences decisions to have children, right? But I think, just kind of the sort of thinking about the arm's length sort of thing that we did here, would suggest we have growth in households with children, middle-aged households with children. We have a lack of access to home ownership, leading to higher, lots of middle-aged renters. So, I think it's just kind of a mathematical thing for us, right? It's like, it's going to lead to higher demand in the rental market for the needs of households with children, which we've seen. Then that plays itself out in the growth in single family rentals, right? And the types of rental unit, matching the types of unit that a larger family would need, whether it's whether they own the house or rent it. What are people with children looking for? And so I think that's gonna, it has, seems like it's that low homeownership rate scenario would kind of put more of that demand to, satisfy the needs of households with children on the rental markets.
Do you have a sense of, um, how the kinds of changes that could be happening, the slowdown in household growth, and you showed, I think, a pretty dramatic early slide on the slowdown, particularly in homeowners, um, and how that might affect house prices, house rents, and affordability. And I guess I'm thinking a slight variant of that question is and putting on your State of the Nation's housing hat, like, are we beginning to see any signs of changes in house prices, either nationally or regionally?
Yeah. So just trying to think. So the question is, would reduced growth in homeowner house, it's kind of chicken and egg, I'm thinking, right? Will reduced growth in
I
homeowner
just get to ask the
households
question. You have the hard
lead?
part.
Right, right. Well, right now, skirting the question a little bit, right? Because there's a little give and take, right? So any change in affordability would lead to more homeowners. So So I think there's some inner machinations we would have to kind of go through. But I think the bottom line is that homeownership right now is super expensive to access.
Yep.
And it's the case is it's I would say it's the leading factor keeping people from becoming homeowners. We've seen that chart of increase, the increase in the number of homeowners just tanking. To get beyond that, right, would take something that's not in our projections. It would take some economic boom or some financial change or switch, right? Difference that we saw, which would lead to more homeownership, but would, ultimately drive up prices still more, right? So I don't know if I'm being super clear,
No,
but
I mean, again, it's a tricky one. I guess the related question is what are we seeing in terms of the pace of either new permitting or new completions, that in a variety of ways you're certainly showing, at least on the home ownership side, a declining demand, if we define demand as people in the market because they can afford as opposed to what they want but can't afford. I would think that as people look at these projections and look at some of the other issues, and the flip is, are we seeing actually a still strong new rental construction as people conclude that they're going to continue to be more and more renters? Or
yeah, I mean, it's playing out that way. So it's playing out in a way that increasingly favors our, low homeownership, high rental demand scenario through the year since our June, State Nations Housing Report came out. We have been seeing a rebound in multifamily starts. Where at the time we were seeing starts declining back in June, you were still like seeing that looking like a trend down, but now it's a trend up in multifamily starts, and it's a trend down in single family starts, which tends to go to the for sale side, signaling the kind of the barriers to home ownership, the affordability barriers. So I think these signs are playing out in a way that's saying, multifamily rental demand is strengthening, as a result of these barriers to home ownership, which are, affordability barriers are hurting construction levels. They're hurting, the existing home sales are still, lower than they were, 30 years ago. Even though they're moving up, they are still way down. They moved up for the last couple of months, but they're still down from where they were even last year when it set a record. So if I might be a little bit late, or like it may not be completely up to date, but that's still, I mean, there's still significantly low, existing home sales. So I think this is all playing out in slow home ownership, hard to access home ownership, and it's resulting in, not surprisingly, but it's helping with the rental market demand.
well, we've come to the end of our time. Certainly not to the end of our questions, and we will share your questions with Dan, and he may choose to respond to some of you, but and really helpful for us. So thank you for all of you who put in questions. I was listening to Dan, and particularly when you put up the slide showing different projections, that there's a famous quote that's been attributed to everybody from Yogi Berra to Niels Bohr, the Nobel Prize winning physicist, that it's very difficult to make predictions, particularly about the future, and yet we have to make the best guesstimates that we can, for a variety of reasons, for investors, for planners, for public policy, and it's something the Joint Center has a long tradition of doing this, and I think doing it reasonably well, notwithstanding the graph you showed, and really appreciate, and on behalf of everybody here, thank you for unpacking it in such a careful, thoughtful, and also very clear way to just really help think through a lot of the nuances of what will actually drive demand. So I hope everybody will join me in thanking Dan We look forward to seeing those of you who are students in Hackett House next week, and then back in 2 weeks for our next housing seminar on fire safety and multifamily buildings. Thanks a lot, everybody. Have a great afternoon, and we'll see you in a bit.
Hey everybody, hope you can hear me. Chris Berg here with Abernathy Holdings and the self-storage report. Pretty interesting information and breakdown of where they see the demographics of this nation going as far as household ownership. Sounds like renters nation based on some of the information in this presentation. You can see the question there scrolling across the bottom. Just curious what your take is, what you see. Is that a headwind or a tailwind for self-storage? If you've been following the self-storage report with Thaddeus Campbell and myself, I think we've probably agree, hey, this is a strong tailwind for self-storage because you look at some of the home builders out there today, Lennar, D.R. Horton, many of them talking about building a much smaller footprint, much smaller homes because of this affordability crisis that our nation is facing right now. We see President Trump talking about a housing emergency, that he's going to do some things. It sounds like with zoning to help increase supply, still not going to matter from a construction standpoint. You're still going to see that smaller footprint of homes. And even right now in multifamily, you hear a lot of multifamily people talking about, hey, we're going to be building smaller units within our multifamily assets as well, which again, I think is going to bode well for self-storage. Recently at the SSA in Las Vegas, they talk about millennials having a dramatic increase in usage of self-storage. They use it much more as like a extra garage than maybe the baby boomers did. So just would love your point of view on that. If you're someone that is kicking the tires, looking into the self-storage asset class, and then you look at some of the 10-year demographic information spelled out here, you look at what the home builders are presenting as far as footprint, multifamily, I think you can make a really strong bullish case on why self-storage is continue to be a very strong asset class, especially as many people know it's very recession resistant. Maybe not recession proof, but recession resistant. So we'll continue to update here on the self-storage report. I thought this was great information. If you would, please share this with your colleagues, help people better understand what's going to be taking place over the next 10 to 20 years. Again, and I think one of the most important variables discussed there was the immigration aspect, right? Like, where does that continue to go? Do we continue to have nobody crossing our borders? Obviously, that's going to be the case throughout this Trump administration. Does that change with a new administration? Obviously, only time will tell. So again, thanks for joining us here on the Commercial Real Estate Report. I'm Chris Berg. We'll see you back here soon.